Hello, everyone. Welcome to this episode of The Den. And today we're going to talk about today's market, 2025 versus 2008. There's been a lot of similarities drawn. A lot of people saying that there's a big crash that's coming up. And we want to talk about that today in this episode of The Den. But before I get to that, let me introduce my friends, my partners, my co-hosts, the fellow members of the Lyons Group. To my right, Paul, Hammy the Rockberry, Aspen the Ninja Gruen, and the boss, Shannon Martin Martinez. My name is Ben, Big Crash Lyons. I don't hit things softly. I mean, if you're going to wreck something...
It's because you're heavier.
That's right. Than most. I got more inertia. Is that what it is?
I got a pretty good story about you in a wreck once, but I don't know if we're telling it today, but yeah.
Well, we should
We should call you Crash.
Yeah. Was that the one with
the four-wheeler?
Yeah. Oh, man. Ooh, man, that was rough.
Well, I've played racquetball with you, and I know what happens when...
Yeah. No. More inertia. But this is not, what is that? That's not economics. What is that?
Physics.
Physics. Thank you. This is not a physics podcast, people. This is a real estate podcast. And we are going to talk about, I've heard a lot lately about, hey, there's, what's going on with the market? Is it going to crash like 2008? I mean, there's a lot of people out there thinking that this is the same market that we had back then when we had the big crash. And today we want to talk about that. We want to maybe dispel some theories out there, or maybe add to some theories. You never know. I mean, we're big theory people. Right, Paul? I guess.
Conspiracy theories.
There we go. That's what I was
talking about. Conspiracy
theories. Okay. So let's just start off with some baseline things, like how many homes were sold in 2008 versus 2025. This may shock you, but back in 2008, there were 4.1 million homes sold, and in 2025, or I should say the last 12 months, the number's lower. Mm-hmm. It's actually 4.08 million homes, which is pretty surprising because back in 2008, in America, there were over 300 million people. I think the total was 304 million people in America. Now we have almost 50 million more people. We're at close to 350 million people in America. So when you start comparing things like, man, we have lower sales for homes, but we have 50 million more people, something's going on. Something's going on there. And you think it's just a slowdown of the market as a whole? Paul, I'm going to kick it off with you.
There are myriad factors in this. I mean, I don't like the comparison with 2008, but that's just me. There could be a lot of things, but the 2008 crash was because of poor lending practices. Right now, we have very elevated home prices, much higher interest rates. I was looking, we're on average 2+ points higher. And the thing that hasn't grown since 2008 is wages. So the market's running away from people. And, this year's been a little bit tougher too, because construction costs are still higher. I know new homes are selling better than existing homes, but we're still in like one of the worst housing years in the last 50 years.
Yeah, it's pretty incredible. I mean, when you're saying prices are running away from people, I mean, that makes a lot of sense. Is that how you feel it, Shannon? Like you just feel like the prices are just getting away from what the normal person or family makes and can afford?
Yeah, because I think 20 years ago, even somebody right out of college or even high school could buy a house. And that's definitely not the case now. Even some people with two incomes in their family can't buy a house. The prices have gotten really, really hard.
So dual income and rising prices, but the wages haven't caught up. That's what you're saying, Paul, is the wages themselves haven't caught up with the appreciation of the assets.
I don't know. I mean, maybe that's true on paper. I don't know if I necessarily agree with that because I can remember, when I bought my first house, and I was making just kind of current wages, but it was still only $7 an hour, and
my daughter just got her first job at $18 an hour. That's starting in Durango.
And I'm sure she's like that's pretty much poverty level.
Right.
Level.
Mm-hmm. Right.
But if you were looking to buy a house, like if she was 20, 30, trying to buy a house, it's really hard.
Yeah.
to buy a house with those numbers.
Well, we had some stats of maybe a month ago or so that came out that we were saying the average median income and I forget what it was, so I'm just thinking in like the 80s was $40,000. Average home was $85,000. Now the average income is $80,000. The average home is $350,000.
Right.
So just in using those, everything's appreciating way faster than the wages are going up. So I think, and not only that, cars are getting more expensive.
Right.
Groceries. I mean, all the things that we talk about every day in this economy.
And you're not wrong about that. You're not wrong about that. And maybe the way I see it is I just think it's not always about just raising wages. I guess that's my perspective of it. I don't think raising wages necessarily, it does help, but then everything else just inflates.
We also have a huge housing shortage.
Exactly. There's so many factors in there. Yeah. So I didn't mean to kind of dumb down your point. You are accurate in what you're saying.
Dumb him down, Shannon. Dumb him down.
No, I think you're accurate in what you say. I guess my perception of it is just I don't see it as that simple. Like if wages just caught up, I still think we would be having a crisis with housing. I still think we would be having problems. I think we have a lot of factors in there that are causing it.
There are a lot of factors. And I think the wages thing is a whole other conversation, but I think that's more fiscal policy.
Well, it is a huge problem. Wages are a huge part of it because whenever you have people like in their 30s that can't afford to buy a house in the area they're living in, now you have almost dead neighborhoods where it's just older people. There's no kids running around. There's no, life in the neighborhood. And it's just not, the trickle down just isn't really happening as much because people can't afford to buy a house. Now, we are lucky to live in an area here where we can find things for a reasonable price. But most of the country is not in that same.
Yeah, we are way under the national average.
Even still, though, I pulled stats for numbers of what people in our area are making on average and what they are, like what house they could afford technically. And with the wages in New Mexico, I did New Mexico as a whole, and the house prices, it's about an average of $160,000 house.
Right. And
we know what that looks like.
There aren't houses in that price range.
If
on rented land.
Yeah. So, but we're also need millions and millions more homes on the market for the U.S. as a whole. And whenever, lumber is being tariffed and we get most of our lumber from Canada, it's just it's a big issue. Everything, it's a bunch of things coming in making this housing crisis.
And I think that's my point. Like there's so many factors there.
That's what I said at the beginning. There's myriad factors. But I think one of the other things is a conversation we just had before we started with your house and the very low interest rate. And that's why houses are not hitting the market.
Why would you choose right now to trade up if you're at a 2 or a 3% interest rate?
Exactly.
There would be no reason to.
The house for twice the cost.
That's right. I'm going to buy a house twice as much as what I owe on this one, and I'm going to pay twice as much for the money that I borrow on it. Most people aren't going to take that deal.
You didn't get a raise to make that. To make that difference. So
people aren't going to take that deal.
Most people, I think this one is more of an economic crisis. Before it was foreclosures. In 2008, it was a lot of.
I think it was bad lending.
Bad lending. So because people could not afford the loans that were given out. So once they all defaulted, I think that's what caused the bubble crash in 2008.
What did you guys call those loans?
Fogger loans.
Yeah.
Like if you could fog a mirror, you could get a loan. And
I got one.
Yeah.
I think that's why we're not seeing as many foreclosures. Like we're seeing a regular amount of foreclosures start to pop up, but we're not seeing like the droves.